This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping this show on my mother's birthday, August 30th, 2013. Our time is 8:44 in the morning. We're on your favorite radio stations. We have as well the show archived for you on Harold's websites, HESradio.com, rarecoloreddiamonds.com, a podcast through iTunes. Type in World Financial Report on Radio. The radio show is portable on your portable device. As well, should remind you that Harold does daily market commentary on his website. You can find it on the podcast site as well. Very, very busy week. Of course, the main concern was Syria. And it seems pretty convincing at this point that they have used gas on their own citizens, which is a huge, huge concern in the geopolitical world. The United States, uncertain at this point what they will do. U.S. President Obama deciding where the United States will take things. The U.K., their parliament had a vote yesterday, and they said, no, we are not going to take action at this point. It will be interesting to see as the days unfold where this goes. We saw gold and silver and oil benefit as a result of the geopolitical uncertainty. A couple of other notes that was interesting for the week. U.S. bank legal bills exceeded $100 billion. The six big banks, led by J.P. Morgan and Bank of America, legal bills of $103 billion with a B, more than all dividends paid by shareholders the past 5 years. And this could last another decade because of lawsuits resulting from the financial crisis. Also, in Cyprus, we know about the bank bailout, bail-in. Well, pretty much they've handed control of the bank because people got worthless shares. They had their money taken from them. The ownership of that bank is now controlled by Russian plutocrats. Also, the world's biggest round blue diamond may fetch $19 million. We'll talk about it. And Eric Sprott brought up an interesting point this week. After gold bottomed in 1976, gold goes from 108 to 850, about 800%. And he says if gold did that today, we would be talking about $10,000 gold. And he still believes that here in a year, we could see $2,400 gold. Harold, it was a very busy week, and it's interesting to note that this situation with Syria is very fluid. I would be very surprised if the United States does not do something.
Well, you can never tell with this crazy administration what they're going to do, but I know a lot of people in the U.S. would be up in arms if they did do that. They just came out of Afghanistan and Iraq, and now to go into Syria at this particular point, a lot of people in the U.S. are not excited about that situation at all. You know, there's a lot of fear in the markets at this particular point. There are a lot of situations happening in Europe and all over the world. The Middle East is a hotbed at this point, and all you had to do is watch the stock markets around the world. Everything was plummeting this week in Saudi Arabia, Dubai, India, Turkey, all in the Middle East. There's tremendous fear at this particular point. Oil has skyrocketed. We hit over $110 this week as we're trading right now. And don't forget, this is a long weekend in the United States. So Thursday and Friday, the markets are very lightly traded. And the only 2 days that the gold market has been down is Thursday, and it looks like it may be down slightly on Friday. But all in all, gold has done extremely well. Don't forget, it wasn't that long ago that we were looking at $1,200 gold. We spent most of this week above $1,400. So we've seen a sizable move in both gold and silver. As we're taping the show, gold's at $1,400. Silver's trading right now at about $23.50. Again, the support levels for gold at this particular point is $13.75, in which we have seen the market spend several days above the $13.75 level. So again, that's the level of support at this point, and the next major level of resistance is $14.80 in gold. In silver, again, we're down 40 cents today on profit taking, and again, the fact that it's a long weekend in the United States. But basically, we've spent several days above the $24 level. I do believe we need to see $28.50, and $28.50 would really solidify in my mind that we're going substantially higher. Platinum's trading right now at about 15 and a quarter. Palladium's trading at 7.30. So again, we don't expect an awful lot on this Friday, as a lot of the traders are gone for the long weekend. The stock market, the Dow Jones, has been down almost every day this week, along with other markets around the world. Right now, we're trading down 36 points at 14,805. The Nasdaq down another 21 at 35.99. The TSX wasn't all that bad this week, but we did have a couple days where it was down. The market's trading at 12,719. The U.S. dollar has been strong lately. The U.S. dollar is up 13 points at 82.12. It is not unusual when the U.S. is going to go into a war-type situation that the U.S. dollar does strengthen. The Nikkei is down another 70 points at 13,388, and the crude oil market's trading at 108.20. As you know, we've been very, very bullish for a long time on crude oil, and I do believe that crude oil is going to go tremendously higher. You know, the fact is that the Federal Reserve in the United States, since 2008, they've poured trillions and trillions and trillions of dollars back into the market. And they were extremely confident that by putting this money back into the marketplace, that it was going to increase business. Basically, it was going to be good for business. Small companies were going to start hiring again. Larger companies were going to start hiring again. People would be making money and getting back to work, and the economy would be back on track, and life in the United States would be great again. The unfortunate thing is that it's not working. The unemployment number is getting worse and worse. The fact is that they've spent trillions and trillions of dollars that they can't pay back, and the economy has not gotten any better. In fact, when the Dow Jones was over 15,000 at about 15,500, the fact is that the Dow was not rallying because of a strong economy. It was rallying because, as we know, of quantitative easing, $85 billion a month going back into the marketplace. So the unfortunate thing is that things are not getting better in the United States. Things are not getting better in Europe, and now things are getting really tumultuous in the Middle East. So the bottom line is that the whole world is in a funk right now. Everybody is broke. The governments are broke. They're all following what the U.S. was doing, was printing and printing and printing, and we now know that that's not going to work. All it's going to do is to affect the commodity markets and the currency markets. And that's a reason why you need to be out of the paper asset markets, because they've been so manipulated over the last 4 to 5 years that my biggest fear is that we're getting ready in October for another major decline in the financial markets. It means that the stock markets around the world can fall substantially. And again, October is the month that normally does happen. At this particular point, the risk in the marketplace is severe. We could see another situation where the stock market drops back down into the $5,000, $6,000, $7,000 level. So the fact is that if your money is sitting in the stock markets at this point here, it may behoove you to get out of the stock market and get into cash at this particular point. Again, the stock markets around the world, everything dropped this week. And if things continue in Syria and as bad as they are in Europe, there's just no way in the world that these markets are going to continue to go. So if you're concerned about your financial future, the bottom line is that you're better off being a little bit safe than sorry at this point. And again, just judging by what happened this week and just the overall feeling in the market, it's getting very frightening for most people that are trading the markets. Now, you've got Wall Street that is bullish on stocks and the economy. And the reason that they are is because they do believe that they'll continue with quantitative easing. But the bottom line is that has to stop eventually, because it really isn't doing any good. So my feeling is that the Dow Jones and the stock markets around the world are getting ready to fall again. And as a very conservative type investor, which I am and always have been, I would be out of the markets at this point. I'd be sitting on the sidelines, and I would be diversifying into other assets that could protect you against the onslaught of what's going to happen. There's no doubt, and I'm in Colorado at this point. I was at a party the other night with some very, very wealthy people, owners of major sports teams and people that are in the know and people that are billionaires. And again, their feelings are very similar. They're not bullish on the economy. They're very concerned about what the future is going to be. And again, at this particular point, when you're a billionaire, it's very difficult to get conservative and be totally in cash type of thing. But the the feeling of the people that I was speaking to were all in agreement that there is going to be substantial inflation in the future, and that's in the foreseeable near future, and they've taken hedges against that. Now, I've been in the financial business for 35 years, and I've traded these markets for that period of time. And again, I've seen similar situations to what we're having right now, and the answer to the financial chaos that's happening has always been hard assets that you can hold on to, hold in your hand, that you own outright, that are not paper, that can't be taken away and manipulated. And again, the worse the governments get, the more desperate that they become, the more these blatant situations are going to happen. I've never sold any of my gold and silver, and the fact is that it would have been nice to say at 1900, if that was the high, that we all got out of the market at that point. But there's no reason to be out of the gold market because we're not trading the market. We're not in the futures market. We're not trading options. We bought physical gold and silver for a specific reason. Physical gold and silver are a hedge against inflation and currency devaluation, and that's what's coming. Japan's devaluing their currency. The U.S. has devalued their currency just by printing as much money as they have. Europe is devaluing their currency, and look at the state of the situations in Europe. So we're in a real crossroads at this point. And again, you're going to have to make a decision within the very near future as to what you're going to do with your money. The fact is that if you do nothing, the chances are that you're going to lose a major part of your net worth. And you've seen it happen before. It happened in 1999, and it happened in 2008. And in all reality, nothing has really changed from 2008. Do you realize that in some parts of the country, real estate went up 20% in 1 month in the United States? Doesn't that sound exactly what they did back in 2006 and 7 when the markets crumbled? And how about all the people that lost their homes due to foreclosure and lost their jobs and everything like that? How in the world do these people get back into the marketplace? How in the world do you have a credit rating that will ever get you to buy another home again? So the only way that home prices are moving at this particular point is because there are corporations that came in and bought certain homes, and now the rents that they're asking for are astronomical. So again, I don't think that we learned anything from 2006 and 7, and history always repeats itself. And the fact is that the feeling in the market at this particular point is a situation of caution and fear. So to be heavy in stocks and to see the stock market fall again like it did in 2008 when it dropped from 14,000 to 6,500, most people will not survive that again. They've lost so much money. It took 5 years for the market to get back up to almost a break even, and now we're in another situation where the market is getting iffy again. So, again, my strongest recommendations are to be conservative at this point. Don't speculate. It's very difficult to make money in those markets. It's not like 1990 anymore when companies were doubling and tripling in price and splitting stocks and things like that. Those days are gone. Right now, corporations are just barely holding on. And in my opinion, one of the biggest factors that's happening at this point, and they better correct it or else we're going to see a situation in the United States that defies description, and it all has to do with Obamacare. We all know that President Obama wants his legacy to be that every American will have health insurance. But the cost of health insurance in the United States is extreme. It's very, very expensive. What President Obama is trying to do is say that if you have a pre-existing condition, you're still insured. Well, if you have dealt with any insurance companies before, you know that if you have a pre-existing condition, either they're not going to accept you or the premiums are going to be astronomical. So what they've actually burdened the corporations with here in the United States is that they have to supply their full-time workers with medical insurance, with health insurance. And the bottom line is it's so expensive that the corporations can't afford it. So what they're doing is they're laying off a major part of their full-time workers and making them part-time. And, you know, if a full-time worker is working 40 hours a week, and the corporation has to spend all the money on health benefits and everything else, all they have to do is fire that person and hire 2 part-time people, and they've saved all those health benefits. But the bottom line is that the unemployment numbers in the United States, it's going to get really, really bad. And the economy has to be bad because people aren't working full-time anymore. So we got a real situation, and then add to the situation of a potential lost generation in the United States and Europe where 35 to 40% of college students are not getting jobs jobs in the United States and 65% in Europe. So again, I see a catch-22. I see a really difficult situation happening with no reasonable way out at this particular point. So if we're caught in a situation where the politicians are making the decisions for us, we've got to take control of our financial situation. My suggestion, be very conservative. If you're concerned about the stock market, and you should be, just sit on the sidelines. In your retirement funds, again, if it's in stocks, go into a cash fund that's still comfortable with RSPs, so you don't have to take the risk of losing all your money. Get into physical hard assets. Gold and silver are proven assets during these particular times. It was only a month ago the gold was down at around $1,200. We're now at $1,400 and change. Silver was down, and people were thinking it was going down into the $12, $13 range. We're sitting right now at $23.50, $24. Diamonds are skyrocketing. There's a $19 million blue diamond going to be sold in the next week. So again, get into the hard asset markets, protect yourself, and not only preserve your equity, but give yourself an opportunity to make some money, because there is no doubt that inflation is coming, and inflation is coming in a huge way. It has to. These are action-reaction markets. When the governments do what they do and reduce the value of currencies, it's eventually going to lead to inflation. And when that comes, you've got to already be in the market. My suggestion, buy physical gold, physical silver, get into the rare diamond market, and you're going to do extremely well when most are going to be suffering, unfortunately, if they make the wrong moves at this point. Don't forget, 90% of the money is made by 10% of the people. We want to make sure that we're in that 10%.
Harold recommends Worldwide Precious Metals. WWPMC.com is their website. Telephone number 1-866-623-2002. Worldwide Precious Metals of Vancouver, a leading worldwide and Canadian precious metals bullion dealer, recommended by Harold for over 10 years. They're the experts to trust and work with in this very specialized market: gold, silver, platinum, palladium. They're going to be in Toronto this October. To book a private information session, call 1-866-623-2002. That's 1-866-623-2002. You can sign up online at wwpmc.com and start your own precious metals investment account today. Speak with Worldwide. All gold is allocated, either wholesale or premium, and Worldwide is there to help you maximize profit, minimize risk. You'll have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal, by the way, is outside the banking system. The metal can be delivered to your door, and Worldwide has access to the physical precious metals you want today. Speak with Worldwide, 1-866-623-2002. The website, wwpmc.com. Get our free weekly newsletter from Worldwide. We send it out every week via email, free of charge. It's something you can go through in 5 minutes on a smartphone, a tablet. You can obviously view it on your computer as well. You can spend hours if you want to, and it's a must-read every week. In our newsletter, Grant Williams, who's a money manager, had this to say: "I don't think the case for gold has ever been stronger than it is today. Even when gold was up to 1900, I don't think the case for gold was as strong as it is now. And the fact that gold is now $500 lower strengthens the case even more. With what's gone on the last few months in gold, the fact that the physical backing for these future contracts is in such short supply, this adds a whole new dimension for the bullish case for gold. If we do see people start selling paper gold on the COMEX exchange once again, people should remember that this has been done, and nothing is going to decrease demand for physical gold. And with physical gold being in such tight supply down at these price levels, I think any quick sell-offs will be met with massive physical buying. This will mean the recoveries in the gold price will be sharp, very sharp indeed. And one of the top stories we have in our newsletter, it's in the silver section of our newsletter. We've talked about this before, and it's sort of funny because it was finally sort of picked up by the mainstream media. City analyst Tom Fitzpatrick came out and said that he sees a 150% surge in gold, but a 300% surge in silver. And his prediction is we still believe that in the next couple of years, we will be looking at a gold price of around $3,500. As the gold-silver ratio plummets, and he believes down to around 30, that would suggest a silver price of around $100. Get that complete article. Citigroup coming out and saying that they see $3,500 gold, $100 silver. Get that article from Worldwide, 1-866-623-2002. The website is wwpmc.com. And it's interesting, Harold touched on a lot of people being very concerned about a financial collapse, and we're starting to hear it more and more. I know John Embry from Sprott Asset Management, Eric Sprott from Sprott Asset Management, very concerned about a financial collapse. And it was interesting. Greg Hunter, formerly of CNN, interviewed Jim Rogers. We have this in our newsletter, the story. You can watch the video online. And he believes a financial calamity is coming. Be worried, be careful. And this is from a man who is a billionaire who worked with George Soros. And he is saying, this is the first time in recorded history all the banks are printing money at the same time. This is the first time we've had massive debasement, and it's going to end very badly no matter what they say. Whether they keep printing or stop printing money globally, it's going to end badly. If money printing stops, banks are not going to be lending. Financial markets are going down. Currency markets are going to be in great turmoil. It's not going to be any fun. And if the money printing continues, you've got bubbles in some sectors, you have inflation, and then you have interest rates going up. Currency markets are in turmoil, and it's a mess because printing money is artificial. It's never worked. As the economy slows down, it's going to be a huge problem. He also goes on to say they're going to take money wherever they can. And listen to this. They're going to take our bank accounts and retirement accounts. That's what he believes. We've had perilous times, and it's going to get worse. It's coming. Be worried. Be careful. Harold, with about a minute left, a major warning from Jim Rogers. This man is a billionaire, and he's a mainstream person, written many books and is on TV all the time, whether it be Canadian business channels or U.S. business channels. But he's saying, in essence, protect yourself.
Better believe it. I read that article many times, and I always have had a lot of respect for Jim Rogers. So I think he's 100% correct. I'm very concerned. I know a lot of people should be. And again, at this point here, you definitely want to read the article in the newsletters this week. There's not only does Jim Rogers feel this way, but several other billionaires feel the same way. And I think you're going to see, come October, some fireworks in the market. Let's make sure we're prepared for that.
Worldwide Precious Metals in Toronto this October. To book a private information session while they are there, call them 1-866-623-2002. That's 1-866-623-2002. Sign up online at wwpmc.com. Start your own precious metals investment account today. Speak with Worldwide. 1-866-623-2002, wwpmc.com. Going to come back and talk about blue diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August 30th, 2013. And as I mentioned earlier, happy birthday to my mother. Happy birthday there, Mom. It's her birthday today. Don't forget, we are on your favorite radio stations, and you can connect with us there. Also, the radio show is archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com. If you ever miss a radio show, you can catch us on the podcast as well. Podcasted through iTunes. Type in World Financial Report on Radio, and we're portable on all your portable devices. Harold does a daily market commentary. Find it on his website, and you can also find it on the podcast site as well. Connect with us and keep us in mind at all times when you need financial news. We have a free weekly newsletter. We'll be happy to send that out to you free of charge via email as well. Don't forget, Worldwide Precious Metals, the company that Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, going to be in Toronto. This October, book a private information session, 1-866-623-2002. That's 1-866-623-2002, or sign up online at wwpmc.com. Start your own precious metals investment account today. Speak with Worldwide Precious Metals. You can get our free weekly newsletter from them as well. In the second half of the show here today, we're talking about rare colored diamonds. Harold's website is rarecoloreddiamonds.com. It was 2005, August of 2005. Harold wrote his very first article about investing in colored diamonds, and the diamond world has never been the same since. The featured diamond of the week, and this is a stunner, a 1+ carat radiant cut, fancy, intense blue. And the reason we wanted to bring that to your attention is the world's biggest round blue is going up for auction, and it will fetch, they think, $19 million or more. Auctioned by Sotheby's October the 7th, part of the 40th anniversary sales in Asia. If you'd like to learn more about that, we have a story in our newsletter as well. There's another blue diamond in the United States they would like to sell for $9.8 million. And one of the other stories I thought was interesting this week, global diamond consumption to surge 67%. Get those stories and more in our newsletter from Harold. RareColoredDiamonds.com. Speak with Harold through RareColoredDiamonds.com or call him at 1-800-432-1022. But Harold, I know this featured diamond, it is an absolute stunner. 1+ carat. This is something that is the rarest of the rare. It's like a museum piece. It's a radiant cut. Absolutely amazing.
Well, thank you, Randy. And blue diamonds are amazing. They're so ridiculously rare. What will change a diamond from white to blue is the presence of boron, a mineral that seeps into the mine. In fact, some of the most amazing blue diamonds ever came from one mine, which was the Cullinan mine in South Africa. And basically, this particular mine is famous for amazing white diamonds, but world famous for their sensational blues. And again, it's so rare to ever get a blue diamond that would come to auction. You know, maybe in 2 or 3 years, they may be lucky to find one blue diamond. That's how rare they are. You know, the price of blue diamonds in 2005, a vivid blue diamond, 1 carat, was about $200,000 a carat. Now, if you could ever get one, they're $2 to $3 million a carat. That's how much these diamonds have gone up since 2005, which is only 8 years that it took for this market to go up over 1,000% or more. So these blue diamonds, when they occasionally do come on the market, there's a tremendous demand for them. The bidding will be all over the world, and the fact is that these diamonds are so ridiculously rare that very seldom does an event like this happen. We have blue diamonds. We very seldom show our extremely rare blues on the website because, again, they're that rare, and some of them are crazy expensive. We have some blue diamonds put away for those that are interested, you know, that are in the $2 to $5 to $10 to $20 million range. So if that's something that you're interested in, we would certainly love to talk to you privately about them. But blue diamonds are all over the news today, so we thought that we would show a beautiful 1 carat blue. It's intense in color. It's a beautiful cut, and just to see a blue diamond is just ridiculously rare. Most people would never see them. I was at a party last night. That would be on Thursday night in the United States, and my wife was wearing a green diamond surrounded by pink diamonds and the same matching necklace, and it was a hit of the party. Most people had never, ever seen a green diamond in their life. That's how ridiculously rare they are. But all in all, the worse the situation gets financially, and the more fear there is into the market with currency devaluation and everything that's going on in stock markets plummeting and problems in the Middle East, people tend to go to hard assets as a safe asset, something that will hold its value and not decline in value like most other assets will. And that's what we bring to the table. We own RareColoredDiamonds.com, really one of the only companies of its kind. And primarily, not all diamonds are investment quality diamonds. In fact, most of them aren't. And most people have the misconception that you have to invest millions and millions of dollars, like $19 million, to buy a blue diamond in order to make money in the diamond market. And that's not true at all. There are certain diamonds of very high quality that are still very reasonable in price that have track records. Let's start with yellow diamonds. A yellow flawless diamond, a fancy yellow, a fancy intense yellow, a fancy vivid yellow, they have to be internally flawless. Those diamonds increase by at least 15% a year. If you look at keeping your money in the bank and getting 1 or 2% return versus putting some money into a rare diamond like a yellow flawless, that will increase 15% every year, no matter what the markets are doing. The only time that these diamonds will actually get more volatile than that is when there's high inflation, because in 1979 and 80, when gold went to $850 and silver went to $50, yellow flawless diamonds went up 500%. So they're a hedge against inflation, and they're a hedge against currency devaluation, and that's exactly the market conditions that we're looking at right now. Now you've got another situation. You've got the Argyle mine in Australia that produces 95% of the world's pink diamonds. That mine is going to close by around 2018, 2019. That's only 5-6 years from now. If you buy an Argyle pink diamond, which is the most concentrated form of wealth in the world, you put that diamond away for 10 years, you're talking about a diamond that maybe you could buy for $50,000 that could be worth anywhere from $300,000 to $500,000 in the next 10 years. I don't know of any other investment that will give you that type of return with the safety that you have in the rare color diamond market. Because when you're looking at Argyle pinks as an example, or even yellow flawlesses, there's a very limited amount of those. There's maybe only about 100 yellow flawless diamonds that are cut in a year. That's for the entire world. One investor could buy that out. In fact, we have many times that our investors will buy 20 or 30 of these just to make a shortage in the marketplace. So, again, the yellow flawlesses are an excellent investment. I've given many of those to my grandchildren and my children growing up for their future, because I would rather put money into a diamond that never declines in value and climbs steadily over the years than put money into a stock portfolio for my grandkids and find out that they're going to lose that money over 20 years. So, again, I'm very comfortable with the hard asset market. We've been in the gold market since for the last 13 years, and we've done nothing but do well in the gold market. Last year was really the only down year that we had, and we knew that was going to happen because of what the exchanges did by forcing the price of gold and silver down temporarily. But that can't happen with diamonds because there's so few of them. So we recommend very highly the yellow flawless diamonds. They start at about $15,000. They go up from there. Again, you can put them in your safety deposit box or put them into a beautiful ring and wear and enjoy it. But it's one of the best assets you could ever have, and they never decline in value, and they respond to inflation and currency devaluation better than almost any other asset. The pink Argyle diamonds, there's maybe about 200 carats a year that are available. It's a tiny little market, and that mine is going to close, and they produce 95% of the world's pinks. There's also the Argyle Tender coming up, and the Argyle Tender is the biggest diamond event of the year. It's when Argyle takes 50 or 55 of their best diamonds, takes them on tour all over the world to 6 different cities, and very high-end jewelers and dealers buy these pink diamonds. They bid on them. You only get 1 bid per diamond, and these diamonds go up tremendously in value. In 2003, I bought a 2-carat vivid pink Argyle diamond for $350,000 at the tender. That diamond today is worth close to $4 million. In 10 years, a $350,000 investment is now worth $4 million. So if you own a fancy light pink, a fancy intense, fancy deep, or fancy vivid pink Argyle, you've got something ridiculously rare, extremely valuable, and something that will evidently make you an awful lot of money over the next 10 years or so. The other diamonds that we recommend are colorless diamonds. They're called D-flawless whites. They're the best white diamonds in the world. They're 10 times the price of a normal white diamond. They also increase by 15% a year, every year, except in 2008 when the Dow Jones dropped 50%. These diamonds went up 50%. They were negative correlated to the stock market. With the fear that the stock market could plummet thousands and thousands of points possibly starting in October, this would be a tremendous hedge against the stock market falling for those of you that don't want to sell out of your stock position. So, the diamond market is on fire. You've got two blue diamonds coming up for sale. One for $19 million. I think another one's looking at about $27 to $29 million. Let me tell you that these diamonds started off way lower than that. For example, the example I gave you in 2003 on the 2-carat Vivid pink, from $350,000 to $4 million in 10 years. I've said this before. A friend of my wife's has got a 5-carat pink that she got from her grandmother. Her grandmother bought it 50 years ago for $50,000, and now the diamond's worth almost $4 million. So this is what the diamond market is about. And as I said, not every diamond is an investment quality diamond. You have to do your homework. Now, I've been in the investment business 35 years. When I looked at the diamond market as an investment, and I did studies on it, and I did find out, and what convinced me to recommend diamonds to my clients was what happened in 79 and 80 when inflation happened and interest rates went up, and these diamonds skyrocketed in price by 500%. I did further studies, and I found out which diamonds were the best diamonds to own. We have diamonds starting at $15,000 and going up to over $50 million. Most of our clients do not buy $50 million diamonds. Most of our clients buy diamonds under $100,000. Many clients buy them in the $15,000, $20,000, $25,000 range. And again, these diamonds will give you a return far better than you'll see at the bank. We were very concerned when Cyprus went under. When the banks in Cyprus went under and stole everybody's money, I felt that it was only a test to see how people would react to the banks stealing their money. And now that we know that there was no rioting, there was no recourse, that people just took it in stride, that's frightening to me, because we feel the same thing is just going to happen in Europe and possibly in the United States. In fact, the article that Randy spoke about from Jim Rogers confirms the same thing. He believes that in desperation, the government can steal your bank accounts and your retirement funds in whichever way they're going to do it. If the government gets into enough trouble, which they're pretty well there now, in order to keep the country afloat, they're going to do whatever they can do. We've seen it happen in Cyprus. We saw it happen here in 2008. We saw the bailouts that happened. We saw all the skullduggery that happened during that time. If you have, you're strictly in cash or you're strictly in paper assets like stocks and bonds and those type of things, you're leaving yourself very susceptible to losing all of your money. If you're in your 40s, 50s, 60s, or 70s, if you lose your money at this particular point, the chances of making it back are slim to none. The stock market won't do it for you, nor will the real estate market. So again, you've got to go to alternative investments. The reason that Bloomberg contacted my company to be on their show for 8 minutes, which is unheard of, is primarily because we're in the alternative investment business. And it's one thing to be in the diamond business, and it's one thing to sell a client a diamond, but to not have an exit strategy for that client, to leave that client stuck with a diamond or an investment that they can't sell, I think is just incredible. So the fact is that when I looked at the diamond market as an investment, the one thing that was missing is the way to resell them. You can sell your gold and silver, your corn, your wheat, your soybeans, your cattle, or whatever on the futures markets in New York and in Chicago. There's a market that puts buyers and sellers together. It's the same thing in the stock markets. In Toronto, you've got the TSX. In New York, you've got the Dow. And basically, you've got Wall Street. And what that system is, they put buyers and sellers together and make a legitimate market. That never existed in the diamond market. It's always been a very private market where diamonds are sold primarily through dealers. When I looked at this business and saw the potential in the diamond business, but realized that there was no secondary market to resell, that's what I set out to do. And my company, along with Relentless Technologies out of Vancouver, built the only company of its kind. It's called 8 Siegel Fine Auctions. It's the only live, real-time auction site for diamonds. And our clients can sell their diamonds, whether they're $10,000 or $15,000 diamonds or $10 or $15 million diamonds. We've set up this amazing business. Our next auction is on October the 21st. We're going to be on Bloomberg again on October 18th because they want to see what we're promoting. And basically, this next auction will probably have 20 diamonds, some beautiful pinks, some Cartier jewelry, maybe some other surprises, and basically all of these diamonds sell. So we built the secondary market just like the COMEX exchange, just like the Wall Street exchange, where we put buyers and sellers together, and that's how our clients will resell their diamonds down the road. Now, at this particular point, nobody's selling. Everybody's buying because the people in the know realize that what's happening in the economy, that diamonds are a sensational investment. So at this next auction, the diamonds that will be coming up for auction are primarily my own diamonds that I've had put aside from my collection over the last decade or so. And the reason that I'm selling is not because I want to sell, it's because it's imperative that we build this diamond business, this auction business worldwide, and that's what we're doing. We'll be able to hold auctions for you in London, England, and pick up British pounds, which are worth 40% more than the Canadian and American dollars are. We'll be able to hold auctions in China and Japan and all over the world for our clients. So we're building this diamond empire for our clients to be able to, number one, invest in the diamond market in a legitimate marketplace that puts buyers and sellers together. And again, that's what we set out. We've had 11 auctions so far, everyone extremely successful. But the last one that we had in June, we had 17 Argyle pink diamonds, 2 Cartier diamond rings that were signed pieces, and an orange diamond ring, and every single diamond sold in 1 hour. It's a phenomenal business. It's probably the biggest contribution that I've made to the diamond industry, and the best is yet to come. So we urge you to look at the diamond market. Again, it's going to give you the returns that you need and the safety that you need to hold on to your money. But again, we've got some of the most amazing diamonds, and they start in the $15,000 range, which means that many people can invest in this market where they couldn't afford to buy a $5 or $10 million diamond. You can get in this market for $15,000. And Randy, you couldn't pick a better time to be in the diamond market. In fact, almost every day this week, they only talked about the diamond market and these magnificent blues that are coming up for sale.
Very true, and we have the stories in our newsletter. Get our free weekly newsletter from Harold. We have the diamond section, rarecoloreddiamonds.com, or call Harold personally and privately and have a conversation, 1-800-432-1022. hsfineauctions.com. Go there, look around. You can see the catalog from past auctions. The next auction, as Harold was mentioning, 8 Eastern, 6 Mountain, October the 21st is the next auction. And our featured diamond of the week, it's a 1+ carat radiant cut fancy intense blue. And these blue diamonds are the rarest of the rare. And it's just something that's absolutely spectacular to see. And we have that, and this is coming up October the 7th, the world's biggest round blue diamond going up for auction, and they're estimating at this point $19 million. They would not be surprised if it did break a record. Speak with Harold about diamonds, rarecoloreddiamonds.com, telephone 1-800-432-1022. And one thing that you and I were talking about off air, Harold, and this is another component to owning hard assets, whether it be gold or silver, artwork, cars, diamonds. In a situation, this is something you can have in your hand. Stock certificate, bond certificate, not so much. Outgoing, and this is the Department of Homeland Security in the United States, Secretary Janet Napolitano warns of serious cyber attack, unprecedented natural disaster. The outgoing Homeland Security Secretary has warned for her successor, a massive and serious cyber attack on the United States is coming, and a natural disaster the likes of which the nation has never seen is likely also on the way, so be prepared. And they believe that if the United States does attack Syria, banks and utilities will be seen as targets by Syrian cyber attacks. And the United States is getting ready for a possible wave of attacks. But Harold, these cyber terrorists, they can go after the power grid, they can go after water, they can go after so many different things. And when you have someone like Janet Napolitano putting out a serious warning like that of a cyber attack or a natural disaster, whether it be a hurricane or a big storm or maybe even a solar flare or something like that, this is where hard assets come into play. You want that diamond in your pocket so you can get out of Dodge.
You better believe it, Randy. And again, the U.S. has got a lot of enemies right now. It's not the most popular country in the world. And, especially in the Middle East, the biggest fear, what's happening right now, is going to be an attack on Israel, which is, the U.S.'s friend in the Middle East type of thing. So, again, things are really getting concerning. The more desperate these governments become, and when money gets tight, how emotions can rise and everything. And it's just a very, very difficult time. And again, we've always believed that those cyber attacks were coming. In fact, in a lot of cases, the banks get hit all the time and money is stolen out of the banks, but obviously it's replaced and you never even know that it happened. And if you did know about it, it would cause a panic in the banking system and people would pull their money out. So again, we're in desperate times, people, and very frightening times. And we really need to be conservative and aware of what's going on at this point. Sometimes we put ourselves in the category of, misery loves company. Everybody's doing the same thing, so, we'll all be in the same boat. But that's not the case. All you have to do is do the right thing at this point and become a little bit more conservative and don't take unnecessary risks, because the risks are out there and they can be managed. The fact is that you just got to eliminate it from your portfolio and give yourself an opportunity to preserve your capital. Again, it's not always about making money. When the banks show interest rates of 2%, it forces people out of the bank because they need a return on investment, and it forces them back into the stock market. And unfortunately, with the general public, because they're not in the know, they buy the stock market at the highs. And that's always been the case. In most cases, people are buying stocks from the executives that are selling their stocks. And if that's not a telltale sign that the people in the know, when they're selling, you should not be buying. So again, at this point, the stock market is not for everybody. It's way too risky. And again, in most cases, people lose their money. It's time to be conservative. We recommend physical gold, physical silver, and diamonds, and that's going to get you through these difficult times.
Worldwide Precious Metals, that's the company that Harold recommends you use when you invest in gold, silver, platinum, palladium. They're going to be in Toronto in October. To book a private information session, call 1-866-623-2002. That's 1-866-623-2002, or sign up online at wwpmc.com. Start your own precious metals investment account today with Worldwide, a leading Canadian and worldwide precious metals bullion dealer recommended by Harold for over 10 years. They're the experts to trust and work with in this very specialized market. All gold is allocated, whether it be wholesale or premium. They're there to help you maximize profit, minimize risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. You can ask about domestic or foreign storage and premium storage in specific coin and bar form as well. Stored metal is outside the banking system. If you want to take physical delivery of precious metals, Worldwide has the worldwide contacts to make sure you get that physical bullion today. Website wwpmc.com, telephone number 1-866-623-2002. And we should remind you that Harold, on his website, rarecoloreddiamonds.com, has a featured diamond section. And because the blue diamond was in the news this week, Harold is featuring an absolutely stunning blue diamond. It is gorgeous. It's a 1+ carat radiant cut, fancy, intense blue. Speak with Harold about that. You can see video on his website. You can also get the newsletter from Harold. And we have, when Harold was on Bloomberg about a month and a half ago, we have video of that. We'll be happy to share it with you. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Harold, with about 30 seconds left, it's not about optimism or pessimism. It's about realism. We're not trying to scare anybody. We've been accused of that before. That's not what we're trying to do. We're trying to let people know where the landmines are out there and protect themselves.
You better believe it, Randy. We've been doing this for a long, long time. We care about our listeners and our clients. And again, all we want to do is get through this extremely difficult times and come out on top. And that's what the show is all about.
Have a great long weekend, Harold.
Thank you very, very much. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022, Worldwide Precious Metals, 1-866-623-2002, wwpmc.com. If you're in Toronto, connect with them and book an appointment. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.